Hello and welcome to the Wendell Effect. My name is Brandon Wendell, and I'll guide you through my view of the energy in futures markets for the week of June 11th. Want to welcome everybody back. Before we get started, just need to remind you we're not broker dealers or investment advisors. We're doing this from an educational standpoint. I'm not telling anybody to buy, sell, or hold any particular securities or give any personalized recommendations. There's always risk in the markets. Please do not trade with money you cannot afford to lose. And we are not subject to trading restrictions, so we could have a position in a security or initiate one at any time. So for the week, before we do, sorry, I was getting into the analysis. Please hit me up, brandonwendell.cmt@gmail.com. If you have any questions, you can email me. You can also find me on Twitter @TraderBdub. And if you could, hit the like and subscribe button to keep us active and on the radar screen to be able to continue to bring you this analysis week for week. So for the week of June 11th, let me go ahead and move myself down there and get out of the way of the chart. So we're going to start off with the dollar. We bounced off a weekly supply and they're seeing a little bit of weakness. I don't see this as a big downtrend, but we could go down to the bottom of the range around 102, maybe even 101.5 again. Going to the daily chart, you see we are definitely retracing, but we still have not made a peak, a top in price, a peak with the RSI below 60. So as long as that doesn't happen, we're still relatively bullish. And we're just correcting and possibly pausing at one of these retracements before we shoot up to that 105.30 next supply zone, the fresh one. Now, if we end up making a high on the daily chart where the RSI is below 60, then look out. We're probably going to at least tag this 102.50, maybe even go all the way down to 101.5 or even lower. So keep an eye out for that. That's kind of the game changer, if you will. The 4-hour chart is definitely looking more bearish. We actually tested demand from last week. I had that marked off, and then we ended up hitting supply and coming down a second time, and we are in bearish territory here. So we're going to start off the week very bearish. It might even sink down towards that 103 demand before we bounce. But keep in mind, the Federal Reserve, the PPI, CPI numbers, we got a lot of stuff going on this week. So if we get inflationary numbers, that could cause the Fed to react a little bit more with the CPI on Tuesday, I believe it is. Actually, let's take a look at the news. I think I still have it up here. I was looking at it for my previous video. Yeah, we got CPI on Tuesday, PPI on Wednesday, and then FOMC in the afternoon on Wednesday. So if we see that there's inflationary pressures, that might put the little more strain on the Fed to raise rates a little faster, and that is actually a bonus or bullish sign for the US dollar. That'll cause the commodities to go the other way. You can see that crude oil on the weekly is still just kind of weak overall. This is not the time of year where crude is very bullish anyway. On the daily chart, we came up to an area of supply. You see us pulling back from that supply. We have tested this demand, so our fresh demand is at 63. I don't see us getting there this week, even if we have a pretty bearish week like we had, but we are heading that way. We are still very, very bearish. You see, prices made a higher high, but we had a lower high with momentum. That's a bearish sign. So we're likely to break down towards this low of 67 this week. And the 4-hour chart just confirms that as well, pushing to the downside, maybe pausing here at 68 with that buying pressure, but otherwise continuing to move down. On the weekly chart of Nat Gas, we have projected downward 113%, pausing there, but it looks as though we're just seeing a little bit of buying pressure creeping in. So this positive divergence could give us a bounce back up to this 2.8 before we continue lower. Daily chart still looking very, very weak, but the fact is we did go above 60 and below 40. We really don't have any direction here. We're just going sideways back and forth. So be careful here. We should, but no guarantee, try to push up at least to these lows. As a matter of fact, let's take a look at what that was on Nat Gas. Go back to my charts here because I didn't mark it off. And on the daily chart, before we go to the 4-hour anyway, if I zoom in a little bit more, this area is what I was concerned about. And let me clean up this chart to begin with. Oops, do it this way. And kind of a drop-based drop area. I believe that's what I was looking at. There's also this a little bit higher, but I think this 2.5 area might be a little bit of a target as we're pulling back a little bit on the daily. I did have a Fibonacci. Well, actually, it's on the 4-hour to show you anyway. There it is. As we're retracing back up, I was saying 2.5. That would put us at about a 61.8% correction. And that is a good target if we continue to creep upwards. And we're seeing a bottom trying to be put in. Hasn't yet. But if we can put in a bottom where the RSI is not below 40, I would expect a pullback to that 2.5 this week. If we don't, if we end up going lower, then obviously my target down below is at 1.9. Looking at gasoline, this also is moving a bit sideways. We got a continuous chart here. We can't get above 60 or below 40. We're moving sideways. Looking at the daily chart, you can see we have a negative divergence going on there with higher highs in price, lower highs in the indicator, and starting to pull back off of that. So I got the retracements up to see where we might pull back to. But so far, it's just a retracement. And on the 4-hour, same thing. We're seeing plenty of bullish pressure hit that daily supply and started pulling back, but that's all it is. We might bounce at one of these retracements or at least the demand zone at 2.45 this week. Finally, heating oil bounced off of the weekly demand zone after a 50% retracement of the most recent impulse up. And you can see that we're getting a little bit stronger, higher low, higher high, but not a lot of momentum there. So we're more likely going to travel a bit sideways for the next week or two. And you see the same thing on the 4-hour. We're stuck between demand and supply with no real momentum. Matter of fact, we're losing momentum. We try to put in a little peak here. I wouldn't be surprised to retest that 2.25 area, maybe even the low, possibly even break demand. It looks as though we might be drifting a little bit lower this week in heating oil. So that's what I got for you in the energy markets. If you have any questions, please send me an email, brandonwendell.cmt@gmail.com. You can also find me on Twitter @TraderBdub. And if you could, please hit the like and subscribe button. It helps us out a lot. You can also get the alerts as well. And I will see you next week. Until then, trade safe, trade well, and take care, everyone.